I listened to my first Taiwan Semi earnings call today.
Oh, you did?
It was very strange, I thought. I'm sure you listened to a million of them. That the analysts ask questions, and then the CFO repeats the question that has been asked for every single question. It's bizarre.
I think...
I don't know what's happened there because he literally, he's like, all right, so the question was, I'm like, huh, that's weird. And then he just did it the entire call.
So it used to be that there was like actually an audience. And so people would ask in the audience and they were on stage.
Oh, that makes sense.
That was how it used to be. And
but you heard the call. Like I heard the question. And
yeah,
then just, I don't know, but that's a plausible explanation.
Maybe it's a cultural thing.
I thought it was odd that their deck looks like it was made in the 90s, like their investment deck. What is that?
I don't know.
Well, I mean, it's only like $1 trillion company, so you got to give them some time.
But it looks like it was made on MS-DOS. Like honestly, like I pulled one chart, but it just looks like that hasn't been updated since 1984.
How do you listen to conference calls? Do you dial in, or have you discovered Quarter yet?
Yeah, I have Quarter, but we use something called Era.
Ah, okay. What's that?
So it's similar to Quarter.
Okay.
You basically go through and you just click through into a call. Makes it really easy.
So we're investors in Quarter, but also like power users. I'm obsessed with it. I don't know how I ever used to, because I like seeing the words get illuminated as they're being spoken.
Yeah.
So you're reading it and hearing it at the same time, and I feel like it sinks in better.
So it's interesting. I talked to one of your sales guys.
Yeah.
From Quarter.
Okay.
And told him that I forget exactly what the pricing was, but Era was giving us better pricing.
Okay. I know some people there. So
yeah.
Well,
I think they actually use Quarter on the back end.
Oh, really?
Yeah, you should.
Yeah, white labeling it. Okay. All right. How many
Am I supposed to be putting these
please.
on?
Yes. How many calls are you listening to each quarter? Like, do you have like people listening for you on some, or do you get to everything yourself?
No, we have a team.
Okay.
Right. And yeah, so we have a team that listens to everything, and then selectively I'll go through and listen to certain calls.
Okay. What are the ones that you personally won't miss?
Oh, I mean, definitively the hyperscalers.
Yeah.
A TSM. I did miss TSM today because I had just a personal appointment.
Don't worry, the AI story is intact. That's what they said.
Yeah.
Great. I read your notes. Yeah, so I don't know. It depends on which quarter it is. I'll try to listen to like Walmart or Costco to understand what's happening on that side of the consumer, an industrial company, a healthcare company. So just a smattering.
Yeah.
Because there's no way that as a portfolio manager we're going to be able to get through the entire portfolio.
It's too many. It's and they're all together, and it's like a fire hose.
Yeah.
You know, it's a great service. There's a Substack called The Transcript that I subscribe to, where they pull from like the most important quotes from all different companies that, of course, you can't listen to all of them. So that gives you a good sense of, like, I don't listen to.
They're doing that with AI.
I don't know, man. This guy listens to a lot of calls, but yeah, I'm sure.
I mean, alternatively, you can just go into Perplexity, and I'll give them the lineup for the day, and
it works.
But no, Quarter can do that. They can all do it. Like, give me the best quotes. What do they say about this? It's great.
All right, this is gonna be fun. So this is your first podcast.
No.
Yes.
No.
It's my no.
He says
it's
no.
my second.
Did you do Joe Rogan last week or something? What was your?
I don't know. What was it, Scott?
What else?
Oh, Morningstar.
All right, fine. But we're gonna pretend this is your first one. I'm sure it was great. Shout to Morningstar. I'm sure it was terrific. All right. This is gonna be a lot of fun, and I'm so appreciative of you coming and doing this.
Are you okay?
Yeah, these are kind of uncomfortable.
I think you have them on backwards.
Oh, I do. Why didn't you tell me that before I told you?
I just noticed now. So this should be on your left side.
Is that better?
We got it now.
That's better.
All right.
Okay.
My hair okay?
Right. You look great.
Okay, great. Thanks.
Daniel, I blame you. I feel like you're not on top of these things. So. All right, guys. How are we looking? Our guest has 9 more conference calls to listen to today.
I think we're looking pretty good. Let me come in and start you up.
All right.
Alrighty.
That's our theme song.
Oh.
So usually the guest will deliver a freestyle rap over this. Do you have something prepared?
No, I do not.
No? All right. All right. We'll do it next time.
I do not have that talent. Sorry.
Episode 238.
Oh. Getting income has its advantages. Invesco's Income Advantage ETFs are designed to provide consistent monthly income and maintain growth potential, all with less volatility and downside risk mitigation. Access some of the world's best-known stock indexes now with added income with Invesco's Income Advantage ETFs. Invesco, let's rethink possibility. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus containing this information. Read it carefully before investing. Invesco Distributors, Inc. My God, 238.
What's your lucky number?
It really is. Ladies and gentlemen, welcome to the 238th edition of the Compound and Friends, your favorite investing podcast. Arguably, and many would say the best podcast in all of investing. We appreciate you guys listening each week. We are doing, John, we're doing record numbers this year. Record numbers. All right. Our guest today has never, ever before been on a podcast. I have it on high authority. She is Dr. Ankur Crawford, the Executive Vice President and Portfolio Manager of the Alger Capital Appreciation, Alger Focus Equity, and Alger Spectra Large Cap Growth Equity Funds. And more, one more, the Alger Concentrated Equity ETF. I just counted 4. You doing 4?
Yeah.
Okay, that's amazing. Congratulations. The ticker on that last one is CNEQ. And that was launched in 2024. Ankur holds several patents and was awarded a fellowship by the National Academy of Sciences. She came to Wall Street 22 years ago and trained at Alger as a semiconductor analyst before becoming head of the technology team and began her career as a portfolio manager in 2012. In high school, she was... No, I'm just kidding. All right. Well, welcome to the show, Ankur. Are you excited?
Yeah,
you fired up
excited.
For this?
I totally am.
All right. So we're going to have some fun. We're going to talk big picture.
It's pronounced Encore. We're told.
It is pronounced Encore. Like
do it Encore?
Again. Yeah.
All right. I apologize. Let's do it that
worries.
way instead. Are you sure, though? Because I like the way that I did it. All right. Encore... I want to start with like the big picture stuff that everyone is talking about today, but then we're going to go much more in depth on semiconductors and your like sort of your expertise. Michael and I have so many questions that we want to ask you, and some of them will be like a Wall Street person trying to understand the chip business better, but some of them might even be insightful questions. And I'm certain by the end of this recording, all of our audience will be much more knowledgeable about that area of the market. Sounds good?
Yeah, I hope I can answer all your questions.
Okay, question 1. What is the fastest land mammal? No, I'm just kidding.
A cheetah.
All right, can we talk about your approach to investing, just generally speaking? How do you manage your funds and how do you think about your role as a portfolio manager?
Yeah, I mean, look, Alger is a growth manager. We've been a growth manager since the 60s. The idea of growth was really incepted by Fred Alger. And
is that right?
Yeah, like he was one of the first growth managers, I think, ever. And so when he incepted what growth is, it really came in 2 different forms. Like the essence of it was, where is the change? Because oftentimes where there's change, there's unrecognized opportunity. And if you can recognize that change before the market, then you make a lot of money.
Right.
So, that is the core of what we look for is an incredible amount of change or just change in general. And that comes in 2 buckets. One, what we call high unit volume growth, which is a typical growth company that is having high revenue growth and they're, disrupting the market in some way. Typical, they may or may not have a lot of cash flow right now, but they're growing into it.
This is what will attract your attention to a stock.
Right. So it's a high top line growth. And the other side of the equation makes us a little bit different in our philosophy relative to most growth managers because it's what we call life cycle change. And these are companies that have already been through their growth initiative. They've probably saturated out their markets and then they have to figure out who they are, right? They've grown up and they're like, do I have more growth left in me or what do I do from here?
There are some great examples of that.
Great
Isn't
examples
Apple
of
an
that.
example of that?
Apple's an example of that. Microsoft is an example of that. Western Dig right now is an example of that.
Western Dig.
The IPPs are
Nvidia is a video
Nvidia
game
is an
chip
example
company.
of that. That's right.
Right. Okay.
So it's as these companies try and reinvent themselves. Danaher was an example of this, right? So it's almost as if, they have to figure out how they're going to grow again or not grow. Right.
Okay.
But we're looking for the ones who are inflecting positively on growth. And what's interesting about that leg of the philosophy is that oftentimes those are incredibly low multiple stocks. And people will say, why are you buying value? Mm-hmm. And what I say in response is, no, this isn't value. This is unrecognized growth.
Okay. I like that. The pitfall there, a lot of companies try to reinvent themselves and can't.
That's right. And so part of that thesis is, what kind of management team do you have? And are they capable of actually turning around the ship? I mean, so think about Microsoft. When Satya came on, you kind of have to hear what he's saying and then see what he's doing in order to execute on the next decade of growth. So that's really what we're looking at. The management team is crucial for executing that kind of strategy.
Okay. And then away from the company itself, every once in a while in the markets, we have a moment where an innovative new technology emerges and the entire world changes right before our eyes. So obviously we're talking about AI today. And I'd just love to hear your take on where you think we are in the AI story. And are you still as excited about it now as you might have been 3 years ago when that change first came along and we got, the original LLMs and people started talking about it for the first time?
Yeah, I think my excitement and my awe of the capabilities has only increased over the last 3 years. I mean, I remember 3 years ago, we wrote a paper called AI and the Declining Cost to Create. And in order to write that paper, there was a lot of research that needed to be done. And I remember talking to a lot of kind of AI natives, people who are in the AI supply chain, talking to them about the capability of what was possible. What is happening today is happening what I thought would happen 2 or 3 years from now, but the timelines have been pulled in, and in part because the capability is just exponential.
Something specific that's happening today, or you're just saying like the pace of it?
I think agents today and what they're capable of today, I thought were going to happen, in 28.
Okay,
and that capability would come in 28, not necessarily today, and so. I would, oftentimes as analysts, we think linearly, and the market thinks linearly, but we are in a time of exponential growth. And so it's really hard to get your arms around what exponential actually means and what the end point is.
Okay.
And so for me, it's been it's a continuous learning process. I have never slept less and worked more because there's just every day there's new updates that are happening and there's just something new to learn.
What's like the most jaw-dropping example of an agentic product or something that you've gotten a glimpse at where you just said, oh my God, we really are living in the future?
I'll tell you, the weekend that OpenClaw came out,
okay,
I didn't sleep.
Not that far, not that
was that 2
long
months
ago.
That was February.
Yeah.
And I had taken my sons on the ski team, and I had to wake up and get him ready, and I stayed up the entire night.
Doing what? Playing with it or reading about it?
I was reading about it,
okay.
And at the time I had a phone. I was at someone's ski house, and so I didn't really have access to the capability of what it could do, but. And I tried to launch one at home, to be completely honest, and it was kind of a mess. I was a little bit afraid of the security aspect of it, but then Perplexity Computer came, and that was probably a month ago.
Oh, Perplexity Computer.
What is that?
Perplexity Computer is almost like OpenClaw, but it doesn't have all of the functionality because it won't go log in and do things for you after having logged in, right? So. It will, again, go do things. I built an app. And in that app, I was having a really hard time publishing it and kind of putting payments into it. And Perplexity Computer completed the task for me.
Okay. So you have this thing paying bills for you on the internet?
Well, this thing, as I was telling Mike before, I have a daughter who's going to college, and the entire college process was so horrible.
Oh,
I thought that no one should ever.
More.
No one should ever have to go through that.
I know.
And so we hired these college counselors. So I just recreated it using an AI bot.
The Common App, filling out the Common App?
It's the Common App, the colleges, and it basically just guides your child through the entire application process.
And you feel comfortable enough that it's doing exactly what a traditional college advisor would do?
I do.
Really?
I mean, we worked with 3 different college advisors. I would say,
This is your first one going?
Yes.
Okay. That's a lot of guts that you have. Because you haven't been through the process before. And
yeah.
So now, okay.
But now that I saw it,
yeah,
it was like, and it was actually my daughter's idea. She's like, there's a lot of kids that can't get a counselor.
That's true.
Why don't we democratize this process?
That's true.
And so, on one of the snowy weekends, we couldn't do anything. So I started building this app.
Okay. So it's filling out the Common App with your kid, and she's interacting with it, and it's not telling her what schools to apply to, but we're helping her organize all the things she has to do for each school.
Well, it goes through and it asks you questions, it asks you 12 pretty deep questions. I think all of us should answer these questions because it tells you a lot about yourself.
Okay.
And then it uses those questions. You tell it, you put in all your stats. You tell it what colleges you want to apply to. It takes the questions and just organizes it for you. So it has version control. Yeah. You can send it to your parents or your counselor for comments.
Okay.
But it has something called strategic intelligence that allows the kid to say, how am I supposed to answer this question?
Yeah.
Given my background, given my stats, given what I've been involved with, how is the best way? What should I really be saying? So it basically
as you're
allows
explaining
that.
this, I'm starting to think the colleges should almost force the kids applying to apply via AI interaction to prove that they're going to be ready for the world that's coming or that's already here. Quite frankly, it almost seems like this should be part of the process.
Yeah, I mean, I think it should be. I built it. So, I think the point is not necessarily the app and how it will, can really change the experience of applying to college. But the fact that I've never coded before.
Yeah.
And I built this it took me 60 hours to build it.
That's a long time, actually.
I know. It was 3 weekends.
Yeah, but she's never coded before. So without it, it would have taken you 60 years.
It would have been infinite because I would never have done it.
You just wouldn't know where to start.
So based on what you said earlier about the type of companies that you buy, these companies are experiencing exponential growth. There's nowhere near saturation. I mean, they just started. Based on, I guess, let's use the most recent round, Anthropic raised at $800 billion. Would this be interesting to you, or is it too early in their growth phase?
So interestingly enough, we recently participated in the last round, and that last round 3 weeks ago was at $380 billion.
My bad. I meant OpenAI was 800.
And OpenAI was 850, okay. I think.
So say more.
we did actually participate in that round. And in part, what's happening is, we have never before in the course of the market seen companies that are staying private till they're almost $1 trillion.
Yeah.
And so there's a lot of value that our clients aren't really capable of touching. And so we're actually going and finding really great companies that we believe in, that we think will grow in the private markets, that have a road to IPO over the next 2 to 3 years.
Which vehicle is this in?
It's actually across all our funds. And so as part of the 40 Act funds, we're able to take 15% of the fund and put it into private.
And is this the first time in the history of Alger that you guys have done this?
No, we've done it before. We were early investors in Palantir back in, I think, 2012, 13, something like that. And we were investors in Chime. So it's not something that we've done often, but we are seeing a really interesting pipeline of companies now.
If you have companies if you have companies going to $500 billion before they even file an S1, and you're a growth investor, on the one hand, it's sad that they're not public and more people can't get access. Yeah. But part of me feels like this helps make the case for active management, at least for growth funds. Growth funds should be doing this as a differentiator versus, their whatever their benchmark is?
Right. Well, I mean, we should be doing it in part because there's so much value for our clients that is residual, and we're not able to capture it in the public markets.
And then these things come public, and you have another decision to make.
That's right.
We are up a lot. Do we stick around? I mean, you probably have a lockup or whatever it is, but
yeah. And look, we haven't had to contend with that quite yet.
Okay.
And we'll see. It'll be really interesting as Anthropic and Databricks and OpenAI come public, what happens.
Well, yeah, because you don't know how the public market will react to it. Like, if the public market vomits it, you might buy more.
That's right.
So
That's right.
What sort of access of financial information do you have as investors in these companies?
We get, depending on which company it is, it's quarterly. We get quarterly statements. Now, not all of them are they won't have conference calls, but we have access to the management teams or someone at the company.
Neither does Berkshire Hathaway, so don't worry. I want to talk big picture. You say that we are short compute globally. Short, everyone is short compute.
Everyone's short compute.
Okay. For how long do you think that persists? Because one of the things, if you're invested in a lot of the stocks in the space, one of the things is like, am I going to be like the last buyer? Am I going to buy right before all of a sudden there's like a glut and everyone overbuilt and, the CapEx plans start to moderate? And that's everyone's biggest fear. Arguably, that's kept people out of this for 3 years, some people. But how do you think about that compute shortage and how much more runway there might be?
So I think of it in many different aspects. First of all, I'm going to go back to that first thing I said, that we think linearly. We've been trained to think linearly. You give someone 2 data points, what do?
They connect them.
How
and
then
far
they
is
extrapolate
distance
it
between here and there?
That's right.
Yeah.
And it's also they extrapolate it, right? So, but what happens if, in fact, that growth is exponential? And again, this is why people are struggling with the CapEx numbers and the growth numbers, because we really haven't experienced exponential growth. And so, that's one aspect. I do believe that this is exponential kind of growth in the amount of compute that we need. And that is predicated on the fact that intelligence is, when you start to build a neural network, it is an exponential problem.
Especially my intelligence.
Yes.
It's a hugely exponential problem. I have always said this. Right. In other words, because when you talk about neural and you talk about, it's the amount of connections.
That's right.
And the amount of connections is infinite. It's a big number multiplied by another big number.
And for every layer beyond, it's an exponential problem, right? So for every connection here has, an exponential kind of more connections beyond it.
Right.
So I think that when you think about how we can use intelligence, and as we try to recreate intelligence, that demand is, it's difficult to fathom, but it is very real. So think about agents. A year ago we were worried about are we in a bubble?
Yeah.
Then we got agents. And right now we're all stopped out on the agents that we can use and the tokens we can use. And, people are trying to token max, and their bills are getting out of control. Why is that?
Yeah.
Because once we can ask someone to do something for us that is productive, we will deploy it.
The CTO at Uber said they already blew their entire 2026 budget on compute. It's like April. Did you see that news?
I did see that.
What do you make of that? Do you think that they just have the guts to say it, and there were a lot of companies in that same position because of the cost of all this compute? You do.
I think there are a lot of companies that, want to use more of the compute. And now that it's becoming accessible and democratized, because you don't have to be a coder to use it, and anyone can use it, I mean, usage, I do think will go through the roof if they have the tokens.
We're going to do some market stuff, but to segue there, does having the level of conviction that you do in the exponential opportunity enable you to live through the periodic drawdowns, not just for tech and AI, but just like market-wide? Is that a big part of your portfolio manager persona?
I don't know if I have a portfolio manager persona per se,
Well,
but
it seems like it seems like you have this innate bullishness about the possibilities. And so maybe that would enable you to endure more volatility than somebody who is either skeptical or doesn't have that same level of conviction.
Well, let me give you an example. In February, I got pretty worried about the market. And it was kind of like a guttural instinct of, if something doesn't feel right, we're starting to put ships into the seas near Iran. And instead of just sitting there, despite my bullishness, I raised 7% cash in our concentrated equity fund.
Yeah.
Right.
Not by selling Anthropic.
Not by selling Anthropic.
Right.
And so it was kind of like more of like a take. You take everything across the portfolio just to raise the cash to buffer yourself for volatility. That doesn't mean necessarily that you're incredibly negative on the AI trade. In fact, through the course of that period of time, I've only become more bullish. So that doesn't mean there won't be volatility with that trade because not everyone believes the same thing I do.
Well, you can raise cash because you have the impression that others are going to sell and that's going to open up opportunities.
That's right.
And that doesn't make you bearish. It just makes you, I think, cognizant of the fact that other people are going to create those opportunities for you and you have to have cash to take advantage of that.
That's right. And you know what? If you can sell something for a profit and buy it back 30, 40% cheaper, you do that any day.
I have a dumb question that I know Josh is thinking, but he's afraid to ask you, so I'll do it. When you and everybody says we're short compute, because everybody's saying the same thing, what literally does that mean? Like, where are the bottlenecks and what does that mean for investors?
I'll handle this. Electricity is a very big bottleneck.
Stop.
Right,
It's enough of you.
No, go ahead.
Well, I mean, the unit of measure that we're talking about is tokens, right?
Mm-hmm.
Okay. So for Michael's benefit and some of the people in our audience.
Could you please answer the question?
No, I'm asking her.
Josh really wants to answer it, so we should let him do it.
Why do we measure this in tokens? What does our audience is like 90% people that are either investing for other people or for themselves and just 10% absolute lunatics. What does the audience need to understand about the way that you're thinking about the compute shortage and why tokens matter to this conversation?
And are all tokens created equal?
Ooh.
That's a really great question.
That's one of the best questions I've ever heard.
So tokens are a unit of intelligence. And think of it as, technically a token is 2 or 3 letters. So you send out a question and it's 100 letters long, that's 30 tokens, right? That's technically what like your input token would be. But really you should think of tokens as being units of compute. And the more thinking are the units of thinking and units of intelligence. And the more intelligence you need, the more tokens you use. It's as simple as that.
Because not just your prompt, but then the response coming back to you.
That's right.
And the tokens come from where? You buy them from these companies?
The tokens is just, think about it as like if your chip is a flywheel or if it's a factory. This is why Wright Jensen calls it an AI factory. So it's a factory where you're saying, I'm putting in 3 tokens, I'm getting out a lot of intelligence, or I'm putting in this many tokens and I need a lot of intelligence out. It has to grind through it. And that grinding is compute.
Right. The computer literally has to carry out its calculations.
That's right.
And then reply back.
So I guess the question is, it's like, all right, so I pay a monthly subscription to these companies, to these LLMs for the privilege of using the compute. And the bottleneck is where like they can't get enough because Nvidia can't give them enough chips because Taiwan Semi can't manufacture enough of them. Like where is it getting caught?
Right now it's you don't have enough chips. Right.
Still,
you still don't have enough chips. Although there's other parts of the supply chain now that are becoming short. So DRAM you see what's happening in the DRAM market. DRAM pricing's grown I think 100% year over year, and that is unusual for a commodity.
Was that foreseeable for you? Did you know that was going to happen?
You know what? Early on, I like two years ago, I was like, God, this is going to really pull on DRAM, but the memory market was horrible. So quite honestly, I thought I was wrong. I was like, my gosh, I'm not seeing a response in the memory market.
Wrong. You were so ahead of your time that nobody else had gotten to that conclusion.
Wait, that's so interesting. The market was giving you a wrong signal and you just thought it was so obvious that it would have priced it in. So you thought you were wrong and the market was wrong.
Yeah, and I thought I was wrong. And then, it basically just took off it's September of last year. So Micron was at $85 in August of last year.
Where is it now?
450. Right. So it wasn't until just now that the market was like, oh my God, we have this massive DRAM shortage because the pricing had just started to take off.
In my head, Micron was like $175 billion market cap. I think it's like 400 now or something, maybe even more.
Is it really? I only know the share price. I don't know what the market cap is anymore, but these things move so fast. It's hard to keep track of the market caps.
You know what's the thing with the memory stocks? I try to explain this to somebody that doesn't know finance or stocks at all.
515. Sorry to interrupt.
And
market cap?
Is that nuts?
It's a $500 billion.
It's
no big
crazy.
deal. No big deal. I try to explain this to somebody who is like not in our industry because they're like, should I buy SanDisk or whatever? I'm like, yeah, I don't care what you do. He's like, no. Like explain it. So rather than try to like go into like memory chips and shortages and it's cyclical, but maybe this time it's not cyclical. I explained it to him in a language that he would understand. I said, think about like restaurants in New York, right? So we have a restaurant called The Corner Store. It's the hottest restaurant in the world. You literally cannot get in. I've been there twice, not to brag. People line up at 3:00 in the afternoon on a Thursday and like hold places for people. And that's just to put their name down so they could sit at the bar. Okay? You like cannot go in this place. It's like Taylor Swift's diner. Okay.
Well, was it good?
Oh, it's great. It's unbelievable. But the point is, I mean, it's nothing. It's not like it's
very good.
It's roast beef sandwiches. Like it's not like you're not going to fall out of your chair. And that's the point. There are 500 other restaurants in the same neighborhood, but people aren't lined up out the door of any of these other ones, or maybe one or two of these other ones. And so my point was like right now, so many people recognize the opportunity in this small handful of stocks. There's like a line to buy them. And they sell off and then they recover just as fast because just everyone wants to be there. It's not that you can't buy another stock. It's not that you can't go to another restaurant. There's only one corner store. And if you open 5 corner stores on the same street, all next door to each other, each one of them would have 1,000 people waiting online because right now, everyone just believes these stocks are going to keep doing what they've been doing, or that restaurant is like the only place that they want to be. But it changes over time. So if you're about to buy it today, don't look at what the chart has done over the last year because it's not going to repeat. Or if it does repeat, it would be extremely anomalous.
So the one contention I would have with that analogy is that the corner store,
you stupid bastard.
No, please give it to me.
Is that you're saying there could be many other corner stores around.
Yeah.
But in reality, because these are technology plays, there's actually for each technology segment, there's only a handful of. But
you and I are old enough to remember when memory was the ultimate semiconductor related commodity.
Okay, but let's talk through that life cycle.
Yeah.
So when I started, my career, there was like 12 different memory companies. 3 were in Taiwan. They were funded by the Taiwanese government.
Yeah.
There was like 3 in Korea funded. There was Micron. I've even forgotten all of the memory companies. Yeah. Now, over time, because of the nature of how difficult it is to, and this is actually a story of the semiconductor industry, because it was so hard to actually produce things at a smaller and smaller node, they were all forced to consolidate.
Yeah.
And so what happened? We basically came to this point in time as a consolidated industry where you basically have 3 players providing DRAM.
SanDisk got bought by somebody and then came back out.
That's right. It got by Western Digi.
That's right.
And then spun back out.
These stocks were 8, 9, 10 times earnings.
That's
when there was a chip, when there was a glut in memory, you could not give these stocks away.
I mean, there's 8 times earnings in August, 9 times earnings in August. And so the thing is like there's only 3 companies you can buy to play memory, right? To play DRAM.
Right.
And so there is no alternative. So
and only 3 suppliers to the industry. Forget about the stocks, like the commodity, the product itself.
That's right. There's only 3 of them.
Yeah.
So there is actually, the reason there's a line out the door is because if you want to play memory, there is actually no alternative.
When you say play, you mean from the investor's point of view?
From an investor's point of view.
So Western Dig in January 25 had a market cap of 15 billion, and it's now 125 almost. Is this a bubble?
No. And in part, what's happened is like, think about the data that is produced. So this is a very interesting.
The problem is that Michael can only think linearly.
You have to think exponentially, Michael.
That's why I love him, but.
So think about all the data that's being produced. There's video, there's, these agents that are producing things for you that need to now be stored. And so all of that data has to go somewhere. Now, the hard disk drive industry is very similar to the memory industry. There's 2 players, Seagate and Western Dig. And they're not adding capacity, right? They're not actually adding physical units. They're increasing the density of their hard disk drives, which is how they add capacity, but they're not doing it at a rate that is going to cause a supply-demand imbalance.
Right.
And
that's another business nobody wanted to be in 5 years ago.
That's right.
Yeah.
I love hearing you say it's not a bubble, because these aren't your biggest positions. So it would be very easy for you to say like, yeah, that shit is really stupid.
Yeah. Well, I do think the bubble talk is really stupid.
Go.
But we can get to that.
Names. No, I'm just kidding. Why is it stupid though? Because to take the contra side, at a certain point, like these stocks will not be rising at the same rate that they have been. So it could be that it's not a bubble for the products and the chips, but it might be a bubble for the investments people are making.
Right.
Or it could be a bubble in demand for compute because there won't be revenue at the end of the...
But that's the part that
I don't believe,
okay,
right?
So say why.
At least through 26, 27, and into 28, based on the CapEx that we expect, I don't think that we'll be in supply-demand balance for compute. We have that kind of visibility. I don't know if 2030 is going to be that way,
right?
Depending on how much CapEx we put in the ground. It's almost like asking me in 1996 whether or not we're going to be in a bubble in 2000. Well, I mean, I don't know. You tell me where the valuations are.
You can't predict what people will do.
Right.
You can't predict what humans will do with their money. It's impossible to know what they'll do 3 years from now. But based on the fundamentals of the announced CapEx over the next couple of years, you think the market is still in an imbalance benefiting the sellers.
That's right.
Okay.
That's right. And so, but the reason that we have to reconsider all this bubble talk is, yes, the stocks have gone up. Yes, it's gone from 15 to 125 billion. But look what the numbers have done. I mean, just in the last 3 months, Western Dig's numbers have gone from 10 to 25.
Wow.
Yeah.
Right?
Which numbers?
The earnings numbers for 26 or 27, one of those, like $10 to $25.
Yeah. It's like a different company.
Right.
It's a completely different company. And this is classic life cycle change for us, right? Where the industry is changing because of, the market changing. So when, like Nvidia, for a long time, people were like, isn't this a bubble? Isn't it over for Nvidia? Well, tell me what the right numbers are for Nvidia. Tell me what the right numbers are for Micron and Western Dig. And I'll tell you if we're in a bubble or not.
Ankur, one of the things people have trouble with, though, is pattern matching and their over-eagerness to say this thing looks like that thing. And I won't even go into like .com stuff because it's played out. But just in the last few years, the solar stocks came and went. The electric vehicle stocks came and went. We had 20 electric vehicle related IPOs in 2021, 2022. And a lot of them literally went to zero. Most of them are single digits even today. And that's despite their fundamentals having improved. So people say, here we go again. They're bidding these stocks up like crazy. They think A, B, C. If A, B, and C don't come through, these stocks are all going to crash.
Okay, so let me comment on that. In that, the first thing.
How do you differentiate? Is the question?
So let me just about the bubble and like people who often talk about this being in a bubble right now. What I have found is that sometimes it's almost easier if you don't understand something, be like, oh, it must be a bubble. Right?
I agree with that 100%.
And so there's a lot of like portfolio managers that I have talked to and met with and CIOs that And it's interesting because the PMs are often like they came from healthcare or consumer. And getting your arms around what is happening with that kind of background is really hard.
Because is that part of your advantage as a growth manager? Is that you're native to this sector?
Personally, I think so.
Okay.
Because it seems so obvious to me. Like what is about, I've never had this much clarity in my career. Okay. And in part because it's pretty clear what's about to happen.
Okay, so you think that it's people that, because we say bubble talk is code for I missed out, or I'm so smart and these people just made all this money in XYZ, it's impossible, therefore it must be a bubble. Like that's how people think.
I know, but that's kind of crazy.
No,
that's
I agree, but
right. So that's on the bubble part that I thought was important to highlight, because I do think when I hear people talk about a bubble, I always ask, like, tell me where you think it's a bubble.
Yeah.
Is it just the CapEx numbers? Okay, let me justify. Why don't you justify, or why don't I justify to you that CapEx number? And I can.
Yeah.
So wait, can you?
First of all,
can you?
I can in a second. Let me get to a solar question, because the solar question is a really important one. Solar was a massive market. And in 2000, when was it? 2000, when we had this company called Trina Solar and JK Solar, there was all
the Chinese panel makers, the Canadian panel, right?
Right. And
Canadian
all of those
Solar.
guys, CSIQ, Canadian Solar, they came to market. And, I was particularly like, I graduated from Berkeley. I loved alternative energy. I thought like oil was evil. And, I would go to these meetings and the guy was like, yeah, we basically built the solar company in my garage. And I was like, that's so weird. You built a solar company in your garage and you're IPOing for $2.4 billion, which now seems like nothing. But I'm like, how does that work? Yeah. And I was just a young analyst. I was like, there's something wrong with this. Like, if I can go, I'm a material scientist. I can just go build a 2.4
spin up a photovoltaic cell right now.
That's right. And so like, why do these guys get to win? And so what happened there was the technological hurdle was so low that as long as there was any profit to be had, it would basically get deprecated.
It became a manufacturing challenge to just make them the cheapest. And of course, China will always win. But then there was also this big government subsidy component to it, which, would come and go. But I just like
but
people
that's
lost
why it's
a lot
so
of
different.
People lost a lot of money. So all right, so in this case, the dollars being spent on this are real and growing. The profitability of it is high from the outset. It's not like one of these things where everybody has to lose money in order to subsidize it. A few companies are willing to do that, but a lot of these companies are coming out of cash flow in their CapEx.
Absolutely.
And that makes it very different.
And I think what you have to remember is if you look across the entire supply chain, because from 2000 to 2020, we have had the entire supply chain has been consolidated. So think about that, right? You had, semi-cap equipment consolidated over the last 20 years.
The box makers.
The box makers consolidated. The chip makers consolidated. Even like the networking guys consolidated.
Yeah.
And so you're coming at this problem from, and why do they consolidate? Not because they had to, it's just the technology became so complicated that in order to go from like a 6-inch wafer to an 8-inch wafer, you almost had to join forces because the R&D budgets were out of control.
Okay.
Right? And that happened for the chip guys too, for to do a tape out, which is basically spin up a new chip. The cost of doing a tape out was going up, 3, 4, 5x. Right. For every single node.
To fit all the transistors, do all the testing.
Right. So the way to do it is you consolidated the market, so you just had more scale, so the R&D budgets were amortized over more revenue.
As I say, I can't remember the last chip IPO.
Astera Labs.
When was that?
2024.
But that's the point. I remember an era where there was a semiconductor IPO every week.
Right.
And it's just, we don't have that.
And now there are just a handful of semiconductor companies, know. There used to be 45, 50.
All using the same 3 foundries.
That's right. Yeah. And it really one that matters.
So can I ask you this? I think the biggest question for investors, if we could see into the future, that would put this debate to bed, is the transition from the hyperscalers, from asset light to asset heavy, spending all of this money, and I see you're getting ready to cook, and I can't wait for you to jump in. Like Amazon, which is one of your biggest positions. All right, so they're spending whatever they're spending on CapEx. Are they going to get a return on their investment that will allow for this to keep going?
So what I would say is I can't 100% say that they will get the same return that they expect. And going into this year, this was my number one, like before Meta put out their big CapEx number, I remember talking to our team and saying, I'm really worried that, the hyperscalers are going to zero cash flow. And that handoff of, we value things on cash flow. As growth managers, we want to see the cash flow.
They're reinvesting all of their cash flow.
They're
now.
reinvesting all of them are investing all of their cash flow. And that handoff can be a tricky one because whenever you have a valuation regime handoff, to going from PE to cash flow or cash flow to PE, from EV to sales to earnings, there's always a period of tricky.
We're living through it.
And we're living through it right now, which is why they haven't done anything for a while.
Well, that's why they derated. We used to prize how asset light they were and how high their cash flow was. And now the story's different. Now they're in the most massive investment life cycle we've ever seen. And there is no more free cash because they're plowing it right back into data centers.
That's right. And what I would liken it to is when they started building out the cloud, right? So in 2011, 12, 13, okay. 14, right? So Amazon started building their cloud probably a little bit earlier than that because they were doing it for internal use. They were spending a lot. We just didn't know because it was kind of inside of their
It was Amazon. They weren't even telling people, right.
That's right.
It was a different time.
And even Microsoft, if you look at how they spent, they were able to kind of build this cloud, although they spent a lot of money.
But it wasn't like this sort of spend, was it?
It wasn't this kind of spend, but only because the cloud didn't come as fast as AI has come. So if we basically had said, oh, let me give you the capability of the cloud with the 5G network and, give it to you immediately, the spend would have been significant. And that's what's happening with AI. Like the time horizons have compressed so much and the capability is so, it's exponentially growing.
So what is Amazon spending the money on and where is the return going to come from?
Well, they're spending the data centers, chips, cooling, the entire shebang of, how you have to build up a data center.
What's the Amazon relationship with Anthropic in your mind as an investor? Like, how key is that? It's like, because I remember 3 years ago, Amazon was talking about Bedrock AI and saying, we're basically going to be a bring your own model. Like anybody can use any AI model they want at AWS. And the street liked that. And then Anthropic just took off for the enterprise. And all of a sudden, it started being more like, well, if you want to play Anthropic, the way to do it is via Amazon because of that relationship. So is that part of why you're so bullish on Amazon or not necessarily?
No, look, I think Amazon, if you look at the valuation for Amazon today on a GAAP PE basis.
Yeah.
And I forget exactly what it is, but it is absolutely not egregious.
Yeah.
It's at like teens.
Yeah.
On an earnings basis.
Which is maybe the lowest valuation you've ever been able to buy the stock for since it's been public.
That's right. I mean, compare it to Costco or a Walmart. It's, I think, 10 points lower than either of those. So is that really kind of the right valuation for a company like Amazon?
It is a grocery store.
It is a grocery store. That's right. But it's a very efficient grocery store.
But the partnership with Anthropic and the investment, like how important is that to your thesis for why AWS could be one of the biggest beneficiaries of AI? Or is it not that important?
I mean, it's important because it drives the top line for AWS.
Right.
Right. So I mean, if AWS is going to grow in the mid to high 30s this year, and part of that is because of Anthropic.
Okay.
So it is important in that aspect, but really for the duration, because Anthropic is going to work with other companies as well, right?
They do already.
And they will, right? And so it can't be the only crux. So Amazon, look, they have Trainium. Like just like Google has their TPU, Amazon has Trainium. And so it is important to own the stack.
Okay.
And because it does lower your cost of compute.
Andy Jassy was talking about Trainium and some of the other chips that Amazon is making and saying if we were to be valued or if people were to think about them as though we were selling these chips to third parties, it would be like a $50 billion business. Do you think that the street is starting to, I don't want to say re-rate because it hasn't really, but do you think the street is starting to feel a little bit more bullish about Amazon's A, ability to produce chips, but B, more importantly, potential willingness to become a big chip seller given the shortage of compute? Like, could that be a whole new leg to why the stock should go higher?
And
I own the stock, question. So I want you to consider my question through that lens.
That's an interesting.
She owns more than you do.
Yeah,
you definitely own more than I do.
I own the stock too.
Okay.
So what I would say to that is that, look, it's an important aspect of the technology. They've been working on Trainium for a long time. I think they are behind the curve, actually, and they are catching up. So Trainium 4 is still...
Okay, delete all of that.
It's still an okay chip. It's not a fantastic chip. I think TPU is a fantastic chip that competes with Nvidia.
That's the tensor processing unit from Alphabet.
That's right. And mind you, they've been working on that for 5 years longer than Amazon's been working on their Trainium products.
Okay.
So Amazon will catch up. I think what is exciting about Amazon on that aspect, not that they're going to sell their chips, is that they can effectively make a compute layer that is, cheaper. So you can do compute on a Trainium that will, be cheaper for you to run potentially.
Okay. So more supply for a supply constrained market.
So, I think it's just more so to think about the stack.
Okay.
Right. So if you go and say I'm gonna use AWS with a Trainium chip to do a certain workload, might it be cheaper if done on a Trainium? It may be.
Versus a very broad, powerful GPU that maybe is not necessary, overkill.
That's right.
For that one task.
And it goes to your question about tokens, actually. Like, are all tokens created equal? We didn't answer that question, did we?
And the answer is?
No. Okay, so all tokens are not created equal, right? I fundamentally believe that this market is there's going to be tokens that you pay a lot for, and there's going to be tokens that, when I ask GPT what the weather is going to be,
right. Versus help me create an atomic bomb.
That's
I
right.
understand.
Like very different. And so why should we be paying the same dollar value for each of those tokens? And not quite the atomic bomb. I don't ask it to do that. You might.
Good.
But
all right, get my kid into Princeton. I got it. Same idea. No, I think that's a really important part of the conversation is that, the initial build is like, all right, it's GPUs. These GPUs are insanely powerful. And probably it's like putting a lion in your house to catch a mouse. If your daily use of Claude is like, what should I have for lunch today? So, so the market will figure out what to use for what, or maybe already has, you're saying.
Right. And it hasn't figured it out quite yet because all tokens are still kind of the same token value.
Yeah.
And so, I do think drug discovery tokens will have a completely different value in the market than, your educational tokens.
So that won't impact me as a user of these LLMs, but that will impact the way the enterprise version is being priced for corporate customers.
Right. And I also think it might impact what model you use. Right. So
people are already figuring that out. People are already saying, I use this for this, I use this for the regular people, not professionals. Yeah. I would imagine professionals, they go way more in depth on which of the company's operations are we carrying out here versus there.
Right. Or an app that you build, right? If you're going to build an app for drug discovery, you may price the app at a level that it allows you to use the most advanced tokens or the most kind of valuable tokens.
Okay. All right. So the products will be in part priced on how or which tokens are being utilized.
That's right.
So these companies keep saying that not spending enough is an existential threat. They have to spend. And they're able to say that because we're in a bull market. And even though some of these stocks haven't done amazing in the very short term, like investors are still giving them the benefit of the doubt. It sounds like you don't think there's a risk that they might say on a call, hey, you know what? we're actually going to take our foot off the gas pedal. But like, is there a chance that the market, and I know we're speculating here, that maybe the market could force their hand? Like if Microsoft didn't stop going down and the stock is down 45%, at what point does Satya say, all right, guys, like maybe we should chill out with all
the
this?
Metaverse example, the stock market enforced the end of metaverse spending. I think we all would agree on that. Like he probably would have kept going 2 more quarters had the stock not been in a 70% free fall. Now Zuckerberg controls all the votes. So it really had to just be his acknowledgement that all of these investors who are selling the stock can't all be wrong.
Right.
That's the concern there.
I think again, it's very different than the metaverse because the promise of the metaverse
I never believed in it, by the way. Credit to me.
I actually believe in the metaverse still, but you needed
How much
AI
virtual
to get
land
there.
did you buy?
Like,
in the meta?
None.
Did you buy a beach house next to Snoop Dogg's virtual beach house?
No, I just played Roblox with my kids.
All right.
So, but you know, the metaverse is actually, I do think it can be a reality. It just needed the capability of AI to get there. And
It was too early.
In 2020, like I remember doing like a little thing for Alger on the metaverse, and I said, this is a 2030 event, right? It's 10 years out. So he was trying to invest in 2020 or 20, when was that? 21?
2020, 2021.
Yeah. So
changed the name of the company.
To basically get to 2030. That was a long period of time.
And also all by himself.
All by himself with kind of deprecated compute, right? So he didn't have GPUs then that were going to drive this AI revolution.
So this is different. This is not that.
So this is different, and in part because, you know, everyone's so worried about the ROI. Like, will we get the ROI back? And what I would say right now at this moment in time, they're basically making their money back in 18 months.
Wait. How? What?
So the cost of compute is actually rising right now. If you look at the cost of an H100, it has been rising. It hasn't been going down. And so you look at the compute stack and how the per hour pricing of a chip inside of one of these data centers, the payback is 18 months.
Meaning because the price of the chips is going up.
That's right.
An investment that you might have made 18 months ago, now you're in the money.
But wait, is that the right way to measure it?
For now, it is. But the point is, what is the ROI? Right? So if you get paid back your capital in 18 months, then do you really have to justify your ROI? Now, the other thing I think that people like miss in this is that they can turn, as soon as they see the demand start to decline or get curbed, guess what? They'll turn off their CapEx.
And we're nowhere near.
We're nowhere near that.
Right.
But the point is, it's not like the telecom, bubble
so that's
of
where
2000.
I wanted to go next. So this is the other thing the bubble people will say. Look at these deal announcements. Every one of them is circular. Every one of them involves a company, vendor financing, some sort of an investment, or paying a customer to pay them back to either buy compute or chips or use of a data center or lease something. And I've heard Jensen deflect that. It's like, of course it's circular. We're all in the same ecosystem doing business with each other. How could it not be, and I'm sympathetic to that. But like, what would you say to people that say, oh, I remember the late 1990s when one company needed to make earnings this quarter, so they would do a deal, and then the next quarter the other guy had to make earnings, so they would do a reverse deal. I understand this is not the same thing, but how do you answer that?
I answer that by, look, every deal has been different. I think that Amazon Meta deal worries me more because you're giving away part of your company to say, use my chips, and I'm going to give you 10% of my company.
What's the Amazon Meta deal?
Not Amazon, AMD Meta deal.
Oh, okay.
Right? So Meta gets 10% of AMD if they get to a certain amount of revenue in AMD chips, right? So effectively, they're giving it for 0% gross margin.
Yeah.
That to me is a little bit more quote unquote circular.
OpenAI, Oracle,
and Meta.
OpenAI
and Meta
right.
both had deals with AMD that look like this. Nvidia basically seeding the market to enable the market is less worrisome because Nvidia's revenues on AI, like the AI-based revenues, is going to be hundreds of billions of dollars.
Yeah.
So the $2 billion that they gave to CoreWeave is like, are they really enabling their own revenue? Not really.
Well, they're seeding a partner who, if that partner is successful, it means years and years and years of future chip sales.
That's right.
But why is that bad?
Why is that bad?
I don't think it's bad.
It's not bad. I think it's common. It's actually common sense.
It's not. Well, we see examples of this in every single industry. Is another thing to point out. So you see, Pepsi gives a restaurant all kinds of free advertising and banners and things to decorate their bar, and therefore sells more Pepsi into that bar for years and years to come. This is just a high-tech version of it with billions of dollars, not thousands of dollars, but it's like a fairly common thing.
Yeah, I that's a great example. I do think you probably see it in a lot of different
Miller
industries.
Lite says, here's a billiards table. Put it right in the middle of your bar, and the lamp hanging over it is going to say Miller Lite. And the rest, the tavern owner is like, okay, cool, we have a pool table. They're buying Miller Lite forever. And the bar does better. And like, this is obvious stuff.
Yeah.
We're just talking about it on a much greater scale here.
Yeah. And that's what scares people. I think, again, if you think about the magnitude of what's happening
All my
here,
metaphors have to do with eating and drinking. I don't know if you're picking up on this. So the audience definitely is.
So the the magnitude of what's happening here is just, it's hard to fathom. Again, if we go back to that, like, it's really hard to think how big and how massive this change is.
Right.
And that's why I think people are just struggling with it.
Okay, so give the audience 3 stocks that will double before the end of the year.
Oh, no.
I'm just kidding. Can we talk about like some of the actual investments that you're making in the public markets?
Sure.
Okay. All right, so we're looking at some of your holdings.
Wait, can we go back to one thing?
Yeah, shut up, Josh.
So one of the things I want to go back to is that this fact, like, in 2000, one of the issues with what happened in 2000 and that 2000 bubble is the CapEx that was spent was long-lived assets. So you put it into the ground. You think about like fiber optic cable.
Yeah.
You put it in the ground. You spend billions of dollars, and they were effectively long-lived assets.
Like nobody needed them for 5 years.
No one needed them for 5 years, and then demand fell apart. But you also didn't have the technology to make use of those cables.
There's no web video.
There was no. I mean, do you remember using the internet in 2000?
Yeah,
it was a horrible experience.
Yeah, it was, it was like chat rooms where you're typing. There's no social media yet. There was no YouTube.
There was no. I mean, you could barely like download a web page without it, glitching or
it could take like 10 minutes to download a song from Napster.
Right,
like that was the internet.
Right. I mean, 2004, 2005, like downloading a movie would take 2 hours.
Days.
Yeah. It would be a horrible experience.
Right.
And so we had dreamed the dream in 2000, but we actually didn't have the technology to support it.
The CapEx was a timing mismatch.
That's right.
Before the demand for all that stuff they invested in would show up.
And what's really different now is actually all the technology is in place. And it's like I've likened this to, when I've spoken to advisors, just to make it a little bit more tangible, I've likened it to, if you were an F1 car engineer.
Thought you were going to say Burger King. She's not using food analogies.
Oh, yeah, sorry. I can't think of a good food analogy. But
no, it's okay.
If you were like, an F1 engineer and you dreamt up this amazing car and you're like, this is the way it's going to work. And I think I'm going to win because, I've dreamt this amazing car up. And you get to the race and you have 4 wheels.
Yeah.
Right? This time you've actually built the car. And the only thing that you're waiting for is gas.
Okay.
Right? Or, electricity to charge your battery. Okay. But like the point is that now the only thing you need is the compute. You have all the other parts in place.
The tech is here. So therefore the CapEx is going directly into something that is currently working.
That's right.
But speaking of the CapEx, there's another doctor investor who's on the other side. Dr. Burry says that there's accounting shenanigans with how they're amortizing these expenses.
Yeah, I don't think that's right. So he's basically saying, they're using 5-year depreciation, but there are 6-year depreciation and they're actually 4 years, which is absolutely just incorrect.
So why is he keep saying that?
I don't know.
He's saying
you should
that,
ask him.
He's saying that you're saying these chips last a really long time. They might not be the newest. They might not be the newest versions.
The A100s are still working.
And those are from 8 years, 7
years
ago?
Those are from 26. They're from 2021.
So
right?
six-year-old chips are still very actively being used.
I mean, the idea that these computes are or that the chips are going to die in 3 years, I don't really understand it.
All right, let's do some tickers. So some of your holdings, and I sort of know a little bit about some of these, but why are you bullish on? We'll just go like a few. Tell us about NBIS.
Oh, wow.
What?
That's like a big, long story, which is really fascinating. I will try to shorten it for you guys.
Yeah, keep it to like 90 minutes. I understand that NBIS, my understanding is this was originally part of Yandex,
Yep.
which was the Russian Google.
It wasn't part of Yandex.
Oh, it's what Yandex became.
Nope. So Yandex was the Russian Google.
Yeah.
Headed by a man named Arkady.
Yeah.
And when the Ukraine
in Russia,
war happened,
Google searches you.
That's right.
All right, go ahead.
When the Ukraine war happened, he had just a disagreement with the politics.
Okay.
And, he was one of the quote unquote oligarchs that, was sanctioned, but he was also on the outs with Putin. He ends up leaving. 1,500 of his engineers end up leaving. I think Arkady paid for all of them to leave. And then he sat there. He's like, okay, I have $2 billion. What are we going to do? And they said, the future is really AI. We know how to build data centers. Let's build AI data centers because we think we can do it better than everyone else.
Okay.
And so, remember they were Yandex. They got delisted.
So it's in Europe. Now it's in Belgium or?
It's in the Netherlands. They're
okay.
based in the Netherlands. But one day they get this call from the New York Stock Exchange being like, you're going to get listed on Monday. Right? And they're like, what do you mean? Like, we're like a private company right now. And it was a Thursday. So they worked all weekend. They get listed. And all of a sudden there was this like weird ticker on the exchange, right. NBIS.
Yeah.
And
I didn't know what it was either.
Yeah. And so like, I was like, is it a word? Like, what is this thing?
People were trading it though.
People may have been, but you know what? Initially when people traded it, it was all the people that were stuck in Yandex.
Right.
Right? That were like, thank gosh, I could get out now. And so they're like, get me out. I've been stuck here for years.
10X'd.
And then, but they didn't have it. No one knew what the story was. So they put out this 110-page deck online. And I don't know. I remember hounding them, being like, I need a meeting with you. And they had no time.
Yeah.
So I hunted them down in Davos. Okay. And
as one does.
And it was, and we got to know the company really, really very well.
Okay. So you look at this as, because I know they're in autonomous vehicles and they have a lot of stuff going on, but like you look at this as a data center play that's domiciled in Europe, but doing business all over the world.
What I would say is that this is actually potentially the next hyperscaler, the next AI native hyperscaler.
Really?
Yes.
Okay. Tell us about QXO.
Oh, QXO. QXO is a fantastic company. It's not a typical tech company, right? But we all know Brad Jacobs. Brad Jacobs was the serial entrepreneur. He put together URI, XPO, left XPO and began QXO. QXO is a building products company. He started it probably about a year and a half ago, bought Beacon Roofing, and he's basically going to consolidate the industry. Okay. What's really exciting about this is that, A, it's Brad Jacobs. We really, like you talked about the management team, we know what he is.
That guy's amazing.
Brad Jacobs might be one of the most impressive people.
Why is he in roofing right now?
Because he's consolidating the building products market because it's incredibly fragmented. Yeah. So what he's seeing is that, well, there's all these mom and pops that are in building products.
Selling
they don't know how to
tile and like all kinds of materials.
He will. He just bought Kodiak.
Yeah.
And he's starting to get into the rest of it. So he started with roofing. Then he's going to get into everything else. He's going to take pricing, add efficiency, add technology.
So you're a growth investor. Like, how much potential do you need there to be in a story like this to include it in your portfolio? Do you think this is like, if it all, I know we don't know that what's going to work, but if it really works, you're not looking for like a 20% return. That's not how you invest.
No.
Okay.
So let me give you just the framework for how he thinks. Beacon is about $1 billion in EBITDA. He thinks that he's going to increase the EBITDA of this company to $5 billion in 29 to 30.
That's a big deal.
That's a big deal.
In a quiet, sleepy industry.
That's right.
And he's done this over and over. This guy,
he's done it over and over again.
I never heard of this guy. I think maybe 4 years ago he was on Patrick O'Shaughnessy's podcast. He's been on, I think again. What an incredible story.
Oh, you know what? He's also an incredible human being. If you see how he takes care of the people that work for him, A, he's a workaholic. B, he truly takes care of them. Like he is like a good boss. He's a great leader. So he has everything you want to see in a fantastic CEO.
I just listened to his book. I think it was called How to Make $1 Billion.
Yeah.
I think that was
the
it.
First one or the second one? There's two of them. How to make
a few $1 billion.
Yeah.
What's the investment case for AppLovin in a world where we think the apps are going to write themselves? Tell us about that. You own that in your ETF and some of your funds.
Yeah, so AppLovin is, it's not really an app creating tool. It's an advertising tool.
It's the lovin'.
It's the lovin'.
It's the lovin' part that matters.
And what's exciting about AppLovin, it used to be—
this stock did get caught up in the software.
It did, and in part because it's part of the IGV. And this is part, and we have to talk about software at some point, but—
Yeah. We'll go have dinner.
We're just getting started.
I know. I need another hour with you guys.
Okay.
So with AppLovin, they're basically an advertising company. And what they realized is that they have a lot of data. They have probably 50% share of, served ads in mobile games. And what they realized is, we're pretty good at this. We're using an AI engine to serve up these ads, and we're improving kind of the return for our clients. Why don't we start putting in lipstick or, actual goods and monetize our ads differently?
Okay.
And so that whole story of we're not only going to show you games to be downloaded inside of games,
so you're playing Candy Crush and an ad pops up for Scrabble, like digital, like
right.
an app. Okay, so they got very good at that. If people play this game, they'll probably play that game.
Right.
Okay, fine. They know how to price it. The game app wants more exposure. Great business. You're saying they're now taking this business in another direction.
That's right. So all of a sudden they're entering the e-commerce market to sell goods. And it helps them monetize their inventory significantly.
Okay.
And so really interesting. I mean, Adam, one of the keys for us is the management team. Adam is a founder CEO, hungry. He's very involved with who gets hired, how they get hired, the headcount. Like he's keeping his headcount flat.
Okay.
Regardless of the top line growth. So it's just a cash generation, like—
You seem to be on a
machine.
first name basis with a lot of the founders of the businesses that we're talking about. How important is access to management for you as a portfolio manager? If there's a company like a NBIS that says, we're not going to talk to you, I don't care if you come to Davos, we don't do or does that cool you off in terms of wanting to be an investor, or is it not that important?
No, it's important because they end up being the stewards of your capital, of our clients' capital, right? We're betting. I mean, it is an important leg of any story is like who is leading a company.
Yeah.
What is their integrity?
Right.
It's really important to know the management teams. Obviously,
can you get too close to them though, where you like them personally and they screw over shareholders or they're more inept than you thought? Like, is that the downside to that?
Well, it's not like I'm friends with them per se.
You just need to be able to ask them questions.
That's right. And I need to understand, like, are they good are they good stewards of capital? I mean, it's important for me to understand that Brad is a great leader.
Okay.
But that is really like he has incredible humility. That is important for me to understand.
I have two more things we have to get to or the audience will kill me. One of them is software, but before we go there, I said 2 days ago, I think Intel is like the stock of the year so far.
Yeah.
The comeback in Intel is extraordinary for a lot of reasons. Number one, it's not every day that a former Dow component, fallen angel, formerly one of the biggest market caps in the country, drops almost to single digits, has a new CEO come in after multiple failed new CEOs, and actually strikes a chord with growth investors again and reinvents itself. So that thing that we talked about early in the show about that reinvention, this looks like that on steroids, but I don't know as much about semis as you do, obviously. So I'd love to get your take on, like, is this a buy here, or did we miss the whole thing, or investors getting too excited?
I'll be honest, I don't know.
Okay.
What I do know is Lip-Bu is
the new
amazing.
CEO. Yeah.
Lip-Bu is the new CEO of Intel. He is, again, an incredible
Is it visionary?
leader. He is a visionary. And I mean, his story with Cadence, I mean, someone should do a deep dive on Cadence and see how he turned Cadence around.
Right.
He took it from almost going bankrupt to the company that it is today.
Okay.
And that was under Lip-Bu's direction.
Okay.
So if there's anyone that could take this asset and turn it around, it's Lip-Bu.
The foundry is now being seen as a strategically important asset, whereas they were being ridiculed as recently as 3 years ago. These idiots thought they could build Taiwan Semi in the United States.
Yeah, and what I would say, that's where I'm skeptical.
You don't believe necessarily that that's a great asset.
And Taiwan Semi is doing it too in Arizona, aren't they?
Taiwan Semi is building their fabs in Arizona.
But if we're short compute, and Intel is a company that can help bring more compute to the market,
right? But you have to. It's not easy, right? So if you've been inside of a fab and built a chip, it's difficult to build a chip.
I wouldn't know,
which is why
guess.
like you only have one, right? You only have one foundry now. You have TSM.
So you're not convinced that this foundry is going to be as successful as the bulls in
I
Intel
don't know,
are.
right?
Yeah.
Because it is a bet on the execution of the engineers inside the foundry. Lip-Bu is not an engineer, so hopefully he will hire the right people to make this happen.
Okay.
But I don't know.
Okay. So you're not currently in Intel.
No.
Have you looked at it recently?
We have looked at it recently.
Okay.
It's an existential question. Like, can you be a foundry or can you not be a foundry?
Okay. SaaSpocalypse. Jensen has said the bears have this story completely wrong. Agents and agentic AI is actually going to utilize all of these CRMs and corporate software to help people. They're not going to spin up their own versions. Therefore, these companies do still have moats and they are relevant for the age of agentic AI. How do you feel about that?
I don't agree, respectfully.
You think Jensen's being too nice?
I think Jensen can't really say what is happening because...
Okay, so that's what I think.
And so why do you think that?
I think what you think. Like, no way. Like, there's no way all of these companies can remain relevant if Anthropic is going to continue to come on at the rate that it's been coming on. So that doesn't mean I think they're all cells. But I think it's really hard to know, obviously. But right now, they're all being treated like cells.
Well, because the growth story, Salesforce cannot do what they've been doing for the last 15 years, where you re-up and the contract goes up.
Right.
And that's a huge part of the story.
Right. Raise prices every year and no one's going to push back. How could that be possible?
And of course, we can't know, is the market overdoing it
with
the selling?
So if you look at, let's take Salesforce. Salesforce, as of yesterday, was trading at 10 times EV to free cash flow. If you include stock-based compensation, right?
Okay.
If you exclude stock-based compensation, including stock-based compensation, it's like 14.5.
That's not that compelling.
It's kind of trading like broken tech with a little option value. That said, I think there's other interesting things out there right now that, I'm definitive will cross this chasm. So, the issue for me on the entire software space is that we only use 15 to 20% of the software of any of these packaged software.
Yeah, they're selling it per head. And people might say, you know what? I'll pay you per use. I'm done with this game.
That's right. And
Okay.
so it's a more competitive market, right? People can write their own software and maybe, and there are a lot of people that will say that's not right because you have the security issues or
valid.
Right? And it's valid. But again, why am I paying you more if I don't use the software?
If one of my employees comes to me and says, I wrote this sick program, I run a wealth management firm. I'm not going to be like, oh, cool, plug that into our system. Let's see what happens. I don't care how much money I'm saving. I will potentially destroy my business. So that's the vibe coding thing. But there's a middle ground where the IT department at a company
can do it themselves.
Makes a concerted effort to actually replicate something that they're paying a third party for. And they show it to the board of directors and they say, like, guys, we really can do this and we can save the company $80 million over the next 5 years. And the company says, all right, that's what we're going to do. Like, that's the real threat.
Top line is coming down for these companies.
That's right. And so I think the best case scenario is they don't get, uplift, as you were saying, on that DBNR, right? Is basically the expansion revenue.
Yeah.
So they no longer can grow on a seat-by-seat basis how much they're selling.
And that was a big part of the growth story. It was the net retention
You
ratio.
know that if we think AI,
and then seats
if we
are
think
gone.
that AI is threatening like employment in general, then higher headcounts are going to be harder to come by, period. Even if you can get a company to sign another package, doesn't mean they're going to have the same amount of employees.
That's right. And so that dream of that 40% operating margin, that was why these SaaS businesses traded at the multiple that they did. I think that's a different terminal value. I don't know if it's 30. I don't know if it's 20. My gut is that given the landscape, these should be 20% operating margin businesses.
Is cybersecurity immune or not immune?
I think parts of cyber will be immune. Parts of it will not be. Right. So, a Palo Alto or a CrowdStrike, more likely to be immune because they're platforms and they can build on that platform just like Microsoft.
Yeah.
But point solutions across
like identity,
right?
Or okay,
point solutions across all of software are going to be at risk because they'll just be usurped by either new players or people who will, like you said, write code inside of the company, and or by bigger players that basically just add that on.
I think the market has this right when I look at Constellation. So Constellation is like a collection of 1,000 tiny niche software businesses where it's like, this is dry cleaning software. So I don't know, this is 20,000 dry cleaners in America, and they all standardize on this one tiny piece of software. That seems super susceptible in a way that CrowdStrike's Falcon platform is not susceptible. And if you look at the dispersion, even within software, let's say they're all down, the ones that are, the ones that seem more replaceable, those are down more. Like it doesn't look like just a wholesale panic. It looks fairly reasoned.
Yeah. I mean, like Cadence isn't down as much as Team, Atlassian.
Right.
Right. Atlassian has zero moat.
Yeah.
And that's why it's trading down to, I don't know where it is anymore, but.
Okay. Are there any software stocks that you think it's already overdone and the market really has it wrong and are buys?
I do think AppLovin was put into that bucket.
Okay.
And
just because it's in the index and they treated it
just because it's in the index. And there were some short reports on it. And, people are worried about advertising and agentic advertising and how does AppLovin get involved with that? I think companies like Palantir, they're like the shepherd that is basically having everyone cross the chasm with them.
Do you own Palantir?
We do own Palantir, not in the ETF, but across the other
That
ones.
one didn't come down until the end.
Right.
Like that one held up better than the rest of SaaS.
Well, it's kind of sold. It actually, I don't know, went from 210 to 160 before like the SaaSpocalypse. Okay. And then it went, later.
Okay.
But so it has pulled in quite a bit.
Is Adobe dead? They're acting like there's nothing special about Adobe, and meanwhile, I see OpenAI shut down Sora, and I don't know who's using all these other tools. But is anyone paying for anything?
I don't know.
Because they are paying for Adobe.
I just started to use Higgsfield AI, which is basically a video generator. It's pretty amazing.
What are you using it for? What sort of videos are you generating?
Well, honestly, I just play with all these tools to figure out what they can do. And with Higgsfield, I was trying to figure out if I can make an advertisement for my app, right? And to see if I wanted to have a TikTok video, how might I make it, right? And it was pretty good. I mean, it wasn't great, but it was pretty good.
I don't know if anybody told you this, but I am the creator of something called Halo. Have you heard this term?
I was told you were.
On a scale of 1 to 10,
Did he tell you?
How clever is that, would you say?
It's clever. I would say
No, that's
I
good
was,
right there.
No. Wait.
Okay.
when we did when we first thought about this, like AI and the declining cost to create, the corollary to this was not, I mean, Halo is like a really awesome way to call it.
She's trying to say she came up with Halo.
No,
Listen to this.
I didn't. But was that any tangible asset would get multiple expansion.
And here we have it. I mean, basically.
So your packaging of it is beautiful.
Yeah, gorgeous. Well, all right. So the reason I'm asking you this question, though, could we overdo it?
Could we overdo which part?
I'm sick of it. I'm sick of hearing about Halo.
Michael's going to throw himself out the window for years again. all right, looking at the Mag 7, if you had to rank all of them from most Halo to least Halo, and I said, I think, so my personal opinion, Apple and Amazon are the two most Halo stocks in the Mag 7, meaning the physicality of what they have and do. Okay, they don't own data centers, Apple, but like my rectangle is my rectangle.
Yeah.
And it's not going anywhere. And it's central to how the user is interacting with all of this AI. I think it's very Halo. What do you think about that?
Okay. If Apple doesn't act soon, that impact, that Halo designation is going away. Because over time, I do believe that AI will allow us to extract ourselves from our screens.
Okay. Into what though? Glasses?
It could be glasses. It could
Desktop
be. I mean,
device?
you've seen the OpenAI. You've seen the OpenAI button. It doesn't matter. It does. Maybe not that.
A contact lens,
but some form.
Something will come along. It could be a bracelet. It could be spectacles. It could be something.
Right. It could be something that hangs with you, that acts. What Apple should be doing is becoming that personal agent.
I can't believe they're not doing it already.
I don't know. I don't understand why they're not.
Where is Agentic Siri?
I don't know.
You tell me. Why doesn't Siri book my plane tickets?
I don't know.
Okay, I agree with you.
And so, but they are not doing it. And
why?
Maybe
they can't. I think they can't do it.
Well, I think they can do it, but they are so.
They fired the AI guy recently. I think they don't have the horses.
They didn't. I don't know if they fired him or if he left.
Sure.
But I think the issue is that they're so concerned with security. As their whole being has been, we are going to keep your data. We're the safe tech.
Yep.
And so how do you do this and still maintain the story that you're basically the safest tech? So, I think there's probably a bit of a conundrum.
You think that's why they announced new and improved Siri and AI capabilities 2 full years ago, have not delivered. Multiple iPhone models have come and gone, and they don't have it. It's crazy. I've never seen anything like it.
I'll tell you, it's incredibly frustrating because
are the alarm bells going off there? Are they nervous?
Hope so.
Okay.
I certainly hope so because I don't know if they're nervous. I think that to some extent they've, milked this device enough. I personally hate carrying around an iPhone.
Okay.
I wish I didn't have to.
I love it. I take it in the shower. No, if there were a new form factor that everyone was doing, I would do. If it's an amulet that you wear around your neck and you talk into it and people just got used to that, I would roll with it, but there just isn't.
But there will be. So
sure?
So our job is to figure out what the possibilities are in 3 years.
Okay.
Right? Is it possible for there to be a different device that is screenless? Is it possible for there to be a different device that you interact with differently so you're not, opening this 150 times a day?
Okay.
Right? And I think there is.
But if that goes away, what happens to Meta?
Yeah. So this is a discussion that we've had internally of as you go to a more screenless world, what happens to other business models?
What happens to Instagram? Right. If I don't have my rectangle and I'm not doing this, then where does TikTok and Instagram get revenue from?
Zero.
Wouldn't it be wonderful to not have TikTok and Instagram? You know how bad it is for our brains?
It's like really good for my ego, though. At least Instagram. All right, I get it. I mean, but they said, listen, I remember Google Glass was already like 12 years ago. It was a bust. The Snapchat spectacles didn't go anywhere. Apple's own stupid helmet that only Michael bought, no one else on earth. They sold one. He returned it, to his credit. Like, I'm waiting, but until I think the rectangle is the rectangle, and I don't think that anything can get in between us and our rectangles.
Yeah, I think for now you're right.
Yeah.
But the longer they don't have a solution, the more at risk their model becomes.
Their CapEx went down year over year. They seem super comfortable
resting
with
on
where
their
they are.
laurels.
Well,
yeah.
I don't know if it's rest. I actually think this part is brilliant. They're like, you guys spend the CapEx. We're just going to be the layer on top that uses it.
We'll just take the 30%. That's right. In the App Store.
We're just gonna sit on top and use your compute.
It's
like you guys go spend all the CapEx.
I think it's either Apple or Amazon are the best of the Mag 7 year to date, for different reasons.
Well, is Apple still the best business in the world?
I think the biggest size and the highest gross margins. probably?
No, Apple's gross margins are not the highest gross margins. Nvidia's gross margins are higher.
Oh, Nvidia. Yeah, Nvidia would be the best.
Even Google's gross margins are higher.
Is that right? Okay.
Yeah, Apple's, 40%, 38, 40% is Apple's.
That's it?
Yeah.
What a piece of shit. Ankur, did you have fun on the show today?
It was great.
All right, so we're going to take a brief intermission and then we'll... No, I'm kidding. I have to say, this has been so illuminating for me. I've learned so much just talking to you today, and I think you were amazing on the show, and thank you so much for doing this.
Thanks for having me. You guys are fun.
Would you come back?
Oh, I would love to.
Okay.
What are you doing next week?
Not next week.
Yeah, this guy just already shaking his head now. All right. I want to tell people how they can learn more about Alger and your funds. So is it alger.com? Is it that simple?
Yeah.
Okay. And do you're not doing social media really, are you? A little bit?
No.
No. Good for you. So I respect that the most, I think.
Maybe I'll write a bot to do it for me.
We want to have you back to talk about robotics and also, I know, look at your face. Look how excited you are. All right. Well, so we're going to.
Oh, we have a lot to talk about.
All right. So maybe we'll do that later this year. I just want to say thank you so much for joining us. And guys, thank you for listening. Compound appreciates you. If you have not yet, hit the like button on this episode on whatever platform you are watching or listening to us. Now would be a pretty good time to do that. What do you think, John? Right now?
100%.
100%, he says.
Like.
All right. Guys, thanks again. We'll see you soon. All right.
Amazing.
Did you like how that came out?
Yeah.
All right.